We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up GBP NZD. We are on the 12-month time frame. Price action last candle to right hand side is a bullish green candle. Very solid. Still within inside the second, third, fourth, fifth, sixth last candle of the market. Seventh, eighth, it was support of lower low structures. So the last few candles is basically at a level of a retest, unless it's denied from the second or the fourth last candles of the market. We'll talk about that soon. Current price is sitting at 2.03137. So we have price action. So we're going to find that lowest low red and green. So if price pushed down, it can tag that lowest low area of 1.7784. Before tagging that area, it can tag below price, which would be near the numbers of below price or at the bottom of the second last candle near the numbers of 1.89408. If price push up, it can head to the following level, which would be headed near the numbers of 2.1976. And we can see that we have a touch with the fourth to last candle. So we're going to see that market as a retest for that market to push down. Unless it engulfs this third to last candle, work its way up out that zone. And we can also see that price action has broken the level, which will be the second, third, fourth, fifth, the last candle market, which will be against those bodies. So if we just take that midpoint that we, the two middle SR lines, we put a zone within that, so we can see that the market is breaking out of an area. So as we walk down the time frame, we are looking for a break and retest, see if that market's going to push up further. So we definitely need the engulfment towards the second to last candle from price action to the second last candle to push that market up, and price action to fourth to last candle to break out that high of that SR line. So let's take a look at what's going on. So market came down multiple times, so it's multiple patterns that we can read. So let's say we're looking for the low red and green. So market came down for the low red and green for that first leg, push up to a level first, second, third, fourth, retest one. Try that one more time. Coming down in red for that first, second, third, fourth, retest one, retest, and that will be the second push if price action push out that area, but overall consolidation. And if you can read it also as a left shoulder, a head, and maybe like a triple right shoulder, because there's so many levels of retest, primarily with the second and the fourth. You may want to add the sixth one, maybe not. So we have a triple bottom overall. That's really the market. But as we walk down, the pattern is going to be identified much more clear. So as I said before, we are looking for that break and retest where current price is coming from and engulf. We're going to see if it's going to engulf that second last candle wick. And if so, we'll see that market can push up. If not, that market can be denied. So when that market came down into that area of that zone, the market came back to retest. So when that market came back to retest, that is drawing out for the first leg, spike up to the high, second leg, third leg, fourth leg, retest area. If price action doing off the second last candle, work its way up against the fourth last candle, market come down from an overall triple top or a double top and a retest, or you can read it as a single top and a double retest. Working our way to the 6-month time frame. So price action on the 6-month time frame is reading as a bullish green candle. Still receive the same candle as the previous time frame, which is the break of the market. It did engulf the second last candle, lined up side by side with the second last candle wick, but still hasn't engulfed the third last candle. So the way we're going to break this down is we're going to just add a midpoint between price action high SR line and the SR line it just broke. So that'll be near the numbers of 2.06574. So we're going to see if that price is going to retest the top of that red zone to push up through the red line, or it's going to follow with bullish green candles or just reverse and drop back down. But we're waiting to see what's going to happen in that area as we walk down these time frames. Now, walking down to the 3-month time frame, price action, last candle to the right hand side is identifying as the same candle, still received a break, hasn't broken the midpoint of that area as we just created. So the way it will be broken down is the top SR line in orange will be the high. This will be second level highs. This will be the midpoint. And if we had to add something here, there will be second level lows, and we have lows of the market of the area that we just created this zone. Monthly time frame. So price action on the monthly time frame is reading as a bullish candle, still has a breakout from the previous side. Still waiting to see if this market's going to push up further, or it's going to consolidate sideways or drop down for a retest. It still creates some momentum. Now we can see the multiple pushes towards that bottom, the tags. So let's take a look at it real quick. So if this market is respected for that break, so primarily just paying attention to that area. So we have that first, second, third, fourth retest. Market pushed up once, so it's coming from a double bottom and a retest. We're going to see if it's going to retest again for that market to push up further, unless it pushes up with bullish green candles, as I said before. Walking down to the weekly time frame. So price action weekly time frame is reading as a bullish green doji. Okay, so what's happening in that area, market's basically consolidating against the second last candle. So what's happening is that when the market did break out of the zone in red, second last candle pushed up, price action basically just retested the price action, retested the second to the middle of that second last candle. But overall, just consolidated sideways, and we're going to see if that area is respected. So if we want, we can add another midpoint between the red SR lines at the top of that zone, and you can drive it right through the second last candle midpoint of that candle, or the high of that candle, so we can see what's going on as we walk down the time frame. So now we are on the daily time frame, and we can see that that market did respect those SR lines that we created at that midpoint, and what's being drawn in that area when that market did create, went into that. And that's we can see that the market went into that area, so identify as a first, second, third. So if it respects, it'll follow up with a bullish green candle. If not, it'll break back down, or it'll break down. If it breaks down, it'll identify as a first, second, third, and market creates that fourth leg and push, but it has to push through the SR lines that we created. You'll see that M pattern at the high. So we already know that we are on the daily time frame, so we're going to grab that second to last candle in the market, going a little bit to the high of that candle and to the low, so we know that we're in the zone. So we're going to take a look at, as we walk down the time frame, what happened past few days. So 4-hour time frame, we can see today we received consolidation. So the market consolidated today. Previous day, the market pushed up to a high. So to go 2 days out, market pushed up to a high, created a double top. So we recreated a double top in that area, which will be first, second, third, fourth. So double top, and the market came back to retest the midpoint or the bottom of that double top. I said the midpoint of that double top, and we can see that that market, if it drops down, you'll see it coming from that first, second, third, fourth retest. And if it pushes down, market's coming from a double top and a triple retest. All together, 5 pushes to that top. So we're waiting for primarily the market to break out of the zone to the top side or bottom side. So we're waiting for that pattern to form. Because price second, third, fourth, fifth, sixth, seventh, eighth last candles of the market, it spikes up to the high, spikes up to the low. This market just created that consolidation. So we have to wait in that area to see if it's going to respect for the low or the high that can respect the previous side to work its way up or down, or just continue to consolidate. 3-hour time frame, take a look at the 2-hour time frame. You see the market just pushed down a little bit on a 2, headed down to the 1. You see market's working its way down, lost momentum, lost momentum, lost momentum, lost momentum with the last 4 candles on the 1-hour time frame. Now 45-minute time frame. Now what's going on with this is that price action is a bearish red candle spike up to the high of the second last candle, small, so it's retesting that midpoint area. So it can be respecting, work its way back up or drop down. GBP, NZD.